Hey there. In this video, we're going to look at render, and we're going to look into where the bulls and bears are battling around, whether there are any bull traps or bear traps, as well as whether there are any whales footprint. These are education content only, not financial advice. Let's start with the daily chart of render. We'll come back to this big picture in a minute. So it's been a while since we last visited render. It was the beginning of the year, and we talked about when we get closer and closer to the 6th of Jan, there is a chance for render to confirm, to break outside of the downtrend. And indeed, it happened, okay? It happened right near to Jan 6 on the 2nd, okay? It confirmed and did a run all the way to the key level of 2.45. Currently, it is trying to go back to retest that level. Okay, so from the bulls and bears battleground perspective, the blue key level that I mentioned, 2.745, all the way down to 1.273, the yellow key level, are the boundaries of this sideways trading period since October last year. So if we want to track what's going to happen, or likely going to happen, okay? Nobody knows exactly what's going to happen. Here, this uptrend that started after the beginning of February. Remember the February 5th and 6th, you can find two pretty big candles. The size of them depends on the project. If you go across the board of altcoins, you'll find these two candles. Some of them have volume much higher than the rest of the full year. Okay, this case for render is not as prominent, but you can still tell from the size of the candles that they are much larger than the full period since the beginning of the year, okay, when it started dropping. So that's a confirmation of the bulls and bears that they have made commitment to let the price bounce above the 1.273. Remember this air hockey table, the metaphor I always use. The two boundaries are the channels. The bulls and bears are battling around that. That's why you see the price always bouncing like the puck in the air hockey table. And now it is trying to head up. It has started this uptrend since February, and it is still continuing with that trend. And we can draw a line over here, letting it stay at this level and below, and changing the color. So what is this line? This is what I call the center line. In this case for render, it looks like it is cutting the air hockey table or the channel exactly in half. But the principle is that it has to cover most of the supports or resistance that happened along the way, along the channel. So sometimes it is skewed towards the weaker half, sometimes it's skewed towards the stronger half. All right, so that's the center line. Right now, it is facing resistance over the past 3 days, okay? That it touched the line and then it got rejected and come down, just like what happened back in February, okay? So if it comes down to test the 1.782, the green key level, don't get surprised because that's also where the lower boundary of the upward channel is. And then, as long as it doesn't break these supports, the uptrend isn't over yet. So, is there any indicative date? Before that, I just want to supplement one point. Those are where the bear traps would be, okay? People look at that and think, okay, it's time to short it, it's going to come back to 1.273. If you don't look at the channel and short it right over there when the price comes down, and don't set your stop loss waiting for the price to come back to 1.273, that's where you got screwed, right? So be really careful. Always have your risk managed and set your stop loss, even if you think the price is going to either direction, okay? It doesn't matter whether it's up or down. It's your practice and your psychology that matters. So if I extend the box, that's what I was trying to point to, the dates. So we always look at the indicative dates where the boundaries crosses certain support or resistance levels. So let's borrow this tag that we use to measure the January potential trend change. Here, it's pointing to 5th of August, okay, 05 AG. What does it mean? It means when the trade gets closer and closer to that point, one of the two C's would happen. What are the two C's? Okay, the first one, continuation, meaning it's going to break the resistance, break the key level, and continue with the uptrend. That's continuation, the first C. Okay? The second is change, meaning changing from the uptrend, breaking the support. It may turn sideways or it may just come back down to test the previous support levels. Okay? One of the two C's will have to happen when the price gets cornered at this, at this range. It doesn't have to land exactly on that date, but it helps us to understand we're getting close to that point. All right. So what about the big picture for render? Here, we see there's multiple tests going on. This test is getting very deep, but, well, the fortunate thing is that, well, you can consider fortunate or unfortunate, reason being, look at what happened on October 10th tariff announcement date. It reached almost the red key level of 40 cents. This round of tests hasn't gone as deep as that, while some other altcoins has gone to around that level or even lower. So is it because render is more resilient, or is it because it hasn't reached its lowest point this accumulation cycle yet? That's why I said it's fortunate that it hasn't reached that level yet. But the unfortunate thing is that it may not have gone to where it should be. So look at what happened back in 2002, 2003 accumulation. That's the low or the bottom of the accumulation at exactly the same level, 40 cents, where October 10th showed us. Okay, so if anything get worse, this round of tests may come back down to test the lower levels. First the orange, 90 cents, then the red. Okay, it's still a possibility. Don't exclude that, even though we want to see the price to come back first to challenge the blue key level we talked about, 2.75. You see October 10th closed over there. This test closed around here. The panic over period closed around the same level. So this is going to be a strong resistance when the price try to come up, when the bulls try to break this barrier, like what they did in January. If they manage to do it, what we want to see next is something we call sign of strength. That means the price comes to challenge the 5.299 level, this light blue key level. That's where the automatic rally first happened at the beginning of accumulation. Okay, this AR is automatic rally, not augmented reality. Okay. Well, if you apply it to the context of thinking that's going to be a bull run starting, that's augmented reality, okay? So that's the thing. One caveat, even if the price comes up to show a sign of strength, it may still retrace back to test the lower levels, okay? Don't think it is going to shoot all the way up just because it comes up for a second time and breaks slightly higher than the previous resistance, okay? It doesn't work as simply as that. Remember, you can find my weekly write-up on Substack at AssetLens. See you in the next video. Thank you.